Okay, so this meeting's being recorded. All right, just to kind of back up, what we're doing here is we are at the moment defining what an order block is. And what we've done is we've marked up the chart. And what we're doing is we're marking up market structure. What is market structure? Market structure is identification of areas of liquidity. That's really what it is. And we're learning how to read market structure. It is the clusters of areas where liquidity will be pooled. And these areas are where the market maker will bounce off of to make an efficient market. Okay, so Justin, I'm going to go ahead and give you screen control here. All right. Let me see. How do I do this again? I make you the host.
Actually, if you click on screen share, there's like a little button to the side, like a little arrow up, and it should give you the option to allow members to screen share.
Oh, we're looking at your screen right now, right?
Yes, but
okay. Yes, okay. Do you have control?
Let me see.
Oh yeah, you do. I see.
Yeah, I do.
Okay,
perfect.
so let me kind of annotate. Oh, gosh. Okay, so all right. Basically, we're going to define market structure and order blocks right now. So here, this is market structure. This entire area is market structure. This is when charters talk about market structure, this is market structure. Okay.
So the areas where we're going down.
Yeah, not down. It's more defining pools of liquidity. That's really what we're doing. Clear all drawings. Okay. And what happens is we could actually do this. You see that?
Mm-hmm.
Rectangle right there. You see that? These are the areas of liquidity. See it? Right?
Yeah.
Okay. These areas of liquidity is market structure. Okay. So within the areas of liquidity, clear oil drawings, clear. Okay. We can see order blocks. This is an order block. This is also an order block. This green candle right here is an order block. Okay. This little green candle is an order block.
Yeah.
This large area is the entire order block. Okay, so order blocks are relevant to the direction in which you're moving. This case right here, we are moving up. Since we're moving up, the order block was created here. Price went up, the order block was created, and then price moved away. Order block was created, price moved away. Do you see that, Humera?
Yeah.
Okay, so
what happens? Try to move it.
That's okay. So what happens is this. Clear all drawings. Okay. What happens is when we identify this is the order block on an upward trend, what's happening inside here is a whale or institution. Let's say you're a hedge fund manager and you have 100 million. You will put a $20 million trade for a sell, pushing price down. And that will force the action to go down. As the action goes down, now that the price has dropped, as the hedge fund manager, Humera, you will now close out your 20 million in profit, right? And you're going to now reverse this to go up. You are now going to drop 50 million to reverse it.
Sorry, could you repeat that again? I'm so sorry, I didn't.
So imagine for a moment, because think about the concept of what's going on. What's really happening is you as an individual are looking for a discount when you get in to buy in the market, correct? When you buy Bitcoin, you're looking for a discount, right? Okay, now pretend you're a hedge fund manager. You also want a discount. When I say you're a hedge fund manager, you are responsible for private money, right? And you are looking to get the best deal. So as getting the best deal, what is the best deal? Is the best deal up here or down here?
Down there.
That's right. So how do you move the market? Whales and institutions move pricing here. You know, when price was at 60,000,
Mm-hmm.
I read a report that it said it cost 90 million to move the price 1%.
Yeah.
So now, if we know 90 million is what it takes to move Bitcoin 1%,
Mm-hmm.
we know that at 30,000 price, 30K, it's going to take about 45 million to
Yes.
move 1%. So as the hedge fund manager, you want a cheaper price. So you're here, you have $100 million, right?
Uh-huh.
And you're sitting here going, I want better pricing. So you're going to take 120 million and you're going to turn this market around.
How is
Okay.
he going to do that?
Because you're going to put an order in for 20
Okay.
million. Okay. Philip, as the hedge fund manager, you want better pricing and you're going to drop 20 million right here and push the price down.
So are you putting in the 20 million? We're talking about dollars, right? $20 million.
Correct. $20 million.
So is that when they put in the limit buy for a lower price? Is that what we're talking about?
Quite possibly. But
Okay.
we don't need to define what type
Right.
of order they're putting in. More importantly, is you understand the concept that they are moving the market.
Yes.
Whales
I
and
understand.
institutions.
Okay,
Whales
so
and
everybody, okay, he puts in the order, everybody's buying that, and everybody's buying the Bitcoin that he put out there, correct?
That's right. Because
Okay.
he's doing what's
And
called.
people are buying it, so the price is going down. Is that?
That's right.
That's the way it works. Okay.
Price is going down. He's actually activating what is called the Circus Effect. You like that, Justin? The circus, and Justin, you're in sales, so you got that. Circus Effect is when the circus would come into town, all right? The circus would dress in plain clothing, and they'd walk up to the booth and say, hey, what's going on? I want a ticket. And back in the 1800s, other people in town would go, what's that? And they would create a buzz, all right? And then the circus clown would say, I want a ticket. Then the townspeople go, I want a ticket too. Next thing you know, everyone wants a ticket and the whole town buys tickets to go to this circus. That's the Circus Effect. So it takes a lot to create the Circus Effect for this push down. And hypothetically, we're going to call it 20 million.
Mm-hmm.
Okay. So now
Sorry, I have a question. Does he know how much money it takes to move the price down?
Oh gosh, the market maker has data that we don't have. They know all the orders. They know where the stop orders are. They know where the pending orders are. They know that data. So they know how far to push this. They know how far. They know where this BMS is. Where now this order block, the guy came in and reversed it, 50 million. They know that he's drowning in negative. I'll explain more about that. But right now, let me just make sure you guys are clear what an order block is.
Hey,
So,
can I ask you a quick question too?
Sure, go ahead.
I'm sorry. So, because I've been in this group for a long time, and market cap equals price times circulating supply. That's how they define the value of Bitcoin. Right.
Circulating supply plus yep.
Yeah. So price. So market cap equals price times circulating supply. So the lower the circulating supply, the lower the price is going to go down. So for me, the way my mind works is I'm essentially associating the price going down with market makers actually selling their Bitcoin versus, unless I'm oversimplifying it, because that would be really selling Bitcoin would be the way that price would go down, correct?
Correct. They are, right here, they put an order in for a sell. 20 million for a sell.
Okay, that's what I want to clear I heard someone say something about buying. I'm like, well, the market makers are buying $20 million worth of Bitcoin and just bring the price up.
Okay, so Humera, let me explain this here for you so you really get it. Okay. So in the currency world, and Bitcoin is a currency, right? Actually, it's traded as a store of value. However, in the currency world, they recognize this using this kind of terminology. First of all, you've got long, right?
Yeah.
So long basically means what? That we are going
Up.
Yep. So short basically means we are going
Down.
That's right. Okay. So when we are talking about the trading of this, we will use terminology as buy,
Mm-hmm.
which represents long, and sell, which represents short. So it's a buy order or a sell order. Does that make sense? Okay.
Yeah.
You got that? That's a very important distinction, because when I say the word sell, it doesn't mean you're holding on to something and you're going to turn around and sell it. It's just an order that was placed.
Okay.
So sell order, which basically means we're shorting.
Mhm.
So here at this point, Hamara and Philip, you guys as the hedge fund manager, you're managing 100 million and you're going to drop 20 million for a sell order.
Yeah.
To short the market right here.
Okay.
Does that make sense? Now that you're selling to short, you're forcing movement down. Now that the movement has been down, you're now looking for a new entry at your discounted range.
Yep.
So when price hits this at the discounted range, you're going to close your sell, close this 20 million, I'm sorry, because this 20 million has now become probably 30 million. Okay. So you're in profit. You're going to close this out and you need to now push the market back into its bias direction. So you're going to drop 50 million to move this back in its proper direction, in its bias direction. Bias meaning its intended direction, along with the market maker's intentions, along with all the whales that got in down here and institutions that have started buying here, because they're all pushing the market this way. Then they pushed it down temporarily, only for the hedge fund manager, you, to come in and repurchase at 50 million to move it back into its original intention, which is for the up. So you drop this 50 million here. Okay, so let me clear some of this because it's real messy. So the order block is a block of orders that push the market in a particular direction in order to get better pricing. Make sense?
Definitely, yeah.
Okay. Now watch this. An order block is to get better pricing for a discount or
improve on losing position.
Yes, order block here to push up to mitigate a losing position. You know what I mean when I say the word mitigate? To ease up on, that's what it means. To ease up on a loss. So they're going to mitigate their loss, because what happens is everyone is thinking this is bullish, right? Even the whales and institutions. But a big whale came and dropped this price. He dropped it at BMS. This guy that actually came in here for a good price at discount is now underwater. He's now negative.
Right. Okay.
He needs now. Go ahead, Philip.
So the whales, sorry. So because the whales are competing against each other as well.
Still, they're just like us, you know?
Yeah.
You know, remember, the whales are not privy to market makers' data. They're not. Give me a second, guys, all right? Let me just, any questions on this so far?
No, you've explained it really well. I'm understanding it. Oh, well, no, sorry, I do have one thing, actually, just to clarify what you're saying.
Go ahead.
So that one big single whale that brought that price down, which confirmed the BMS.
Yes,
So it's the
right
other
here.
whales that didn't know what was going on, that
Yep.
wasn't part of that big whale's plan, who's trying to now purposely bring it up so that they can break even or get slightly higher than what they originally
Yep.
tried to do. Yeah.
They're going to
mitigating it.
mitigate. They're going to mitigate
Yeah.
their losses. Correct. Yep.
Okay, perfect. Got it.
Exactly. That's exactly what's happening here. Right here. Mitigation. Okay. Understand that the fundamentals that we're going through right here, this is senior data. This is the most important, all this. Okay, guys? All right. So order block. You guys get order blocks? You guys get that?
Yeah.
Okay. So Humera, explain to me what an order block is.
It's
In your
an
words.
area. Okay, it's an area of liquidity.
Mm-hmm.
And it's where sort of market maker or whales sort of manipulate the price, where they can move it in a certain direction to get a better, a better price, or to mitigate their, I guess, losses that they've had.
Correct.
So
This
yeah,
one?
everywhere where you've squared over, those are the order blocks.
Yep. This is a mitigation order block, right? It's an order block, but it is they came up to mitigate.
Yeah.
They were
Whereas
not
the
looking
other ones.
where this one, they want better pricing, discount. This one, they're looking to fix a bleed, fix a cut. Okay.
Can you mute the other?
Yeah, how do I do that? Let me see. Hold on a moment. Okay. Hold on a moment.
Oh, I did the bigger bag that has more in it.
Okay. There it is.
I have a choice. I have one question.
Yes.
How, at the last higher high and the next lower low, explain to me where was the loss that the institution?
Higher high to lower low. This right here. Okay, I'll
the
show you.
highest high,
Okay.
the highest.
This right here to this right here.
Exactly. Where was the loss? Which loss are they mitigating?
Yes. Now when I explain order blocks, I want you to understand I'm really doing my best to just keep it in its simplest explanation as possible. There's a lot more information going on, but I really need you to just understand the concept. So take a look. We're going to start from here, right here. Okay. See this order block right here, Philip?
Yeah.
Okay. On this order block, imagine you're the market maker, the hedge fund manager. You own an account with $100 million. You want a discount. Just like right now, Philip, we're looking for discounts down here. So we're waiting. So you're looking for a discount because you got a ton of money. You're going to drop 20 million. You are going to force the action down. Now that you force the action down, you're going to close your 20 million. And you're going to rebuy at 50 million. You close this because this 20 million is now 30 million because you put a sell order here. You got that, Philip? You got that? Yes?
Yes.
Okay. So when price came down here at 50 million, you are looking to put a buy order here at 50 million to push price up. That 50 is now probably 70 million, right? It's now 70 million. What happens is, let me erase some of this. You're in profit for 70 million here. Some whale institution, or in reality, it's a combination of news, right? Probably Elon Musk, I don't even remember. News, because the market maker moves and uses news to his advantage.
Okay.
The news could be positive, but the market maker drops the price. That's the craziest thing about reading markets, right? It's just the nature of the game. So it might have been news that propelled this down just to get it started. And some whale came in and dropped 100 million. Pushed it heavy down. But he's got 500 million in his wallet. So he drops 100 million, pushes it down. You were 50 million here, now 70 million here. You are now negative here. You are BMS. So your 50 went from 70 down to, I don't know, 43 million.
Yes, I understand that now.
A lot of millions. So now you go, you know what? Let me push it and add another 20. So you got 43 plus 20. You're now at 63 million. You push this market up. You see what happened there? Okay. But you're not the only one who mitigated this. A lot of your friends, they're all hedge fund guys that own yachts. You know, you guys are all in here together. So collectively, you came in, pulled your money together, pushed it in one direction, mitigated. So you were 43 million in the hole, 20 million. You dropped to turn the market around. It mitigated. You didn't make back your full 70, but you know what? You're positive on this 50. You're positive on your 20, and you exit.
Okay.
Make
Okay.
sense?
Yes, it does. Now,
That's
now it does.
exactly what
Thank you.
happens during this BMS. That's what happened, and why mitigation occurred. Make sense?
Yeah.
Okay. So Philip, explain to me what a order block, the order block and the mitigation. Feel free to grab the annotation tool if you need to and mark up the chart. Can you do that? I
Sorry,
really
Nick.
want,
Oh,
yeah,
I'm
because I really want you to get this.
How do I draw on this chart?
Oh, how do you annotate? Go to the top,
Yeah.
view options. Take your mouse, put it to view options, and there's a tool that says annotate.
Hey, Julius, you have to relinquish your annotate first so he
Yep.
can
Oh,
annotate.
I got it. No, I got it.
Yep, I did it.
Yep.
Sorry. Yep, it's cool. Okay, so kind of illustrate to us and explain to us what happened here from exactly how I explained it, but in your words.
All right. So, this guy right here.
Show us the order block. Yep. Where was the original order block?
Right here? Or it was the previous
Yes,
one?
that's the original order block, correct. And where would you draw 50 million? Where would you do it?
Right here. So I spent $20 right here.
Yeah, don't use the word. Yes. You don't use the word.
I put a sell order.
Sell order, correct.
I put a sell order in for 20 million to push the price down.
Yep.
I'm at 50 million, right? So this turned into 50 million because all these orders were bought for about 30, let's say. Now
you closed out your 20 for profit because you were at the top for 20. Yes. It's now 30. Exactly. You close that out and you put a new order in at 50 million for a buy.
Yes.
Yes. Okay.
So right here.
You're in profit.
Yes, I'm in profit. Let's say 70, because this is 30 plus 50, 20, about 70, 80 million, right?
Correct. Yep.
Okay. Now, I want to push the price down to get a better, and I'm pushing it down. Mm-hmm. So I spend another 20 million or something like that to push the price down, and it goes down, and I'm okay.
Yep.
I should right here, I should buy again to be in profit right here. But
correct.
Somebody comes in here and pushes the price down
deeper than yours. Yes.
Yes, I put my over here, but it's not going up. It's going down because somebody interfered. So here I'm down. I'm down for this because I spent this money and I put my order here, but the price is going down. So I
Yes.
lost this money right here. I lost this money right here.
You
In
didn't lose
addition to my
yes, you didn't lose the money. It's starting to erode at your initial
exactly.
price entry. Correct.
That's what I mean. That's what I mean, right?
Yes. Yes.
So what I do, get additional, not spending. I'm putting an
Another-
order right here.
Another buy order. Correct.
My order right here. Now, this is where I get mixed up. Do I know how far I'm going to get? Because
Okay. You really don't.
what's my expectation? What's my expectation here?
Your expectation is to push it
right
as
here, as far as I can.
Yep.
Right?
Your expectation is to because we don't know what his numbers look like. We're only giving hypothetical ideas of what his numbers look like, but
Okay.
he might have exited on that first see that first red candle over there, that little
Right here.
correct.
Right here.
He might have exited there. You know,
Yeah.
makes sense, right?
Yeah. Because he doesn't know what's happening now because he's not in control of the market, basically, right?
Yeah.
Okay.
His control is the amount of money.
Yes.
However, we know, actually they know too. They know that the market seeks efficiency. So they know that the market maker will look to pair up buys and sells. So they are going to go back to areas of previous order blocks or price imbalance. And that's how far they're going to mitigate.
Okay, this is a thing I didn't get to about the price imbalance. Maybe it's going to be our next topic. But so now I'm waiting for the price and I'm looking for an exit point right here somewhere.
Correct.
And by some, I guess I'm looking for a trend change around here, and I can see that the trend is changing. So I'm exiting right here because I know this is as far as I'm going to get. And I didn't lose all this cash. I didn't exit here. And I got as far as here. So this right here is how much I lost, right? I mean, I'm in this range, except instead of being right here, I'm right here. But I'm okay with that because I got a yacht and more money and a lot of cocaine, I guess, as a hedge fund manager.
And
So now I know that the market has turned around, and I'm going to be starting again and putting short orders, analyzing the market again, and going and shorting this. But I guess this is another next story. Can I erase this?
Yes. So go to your annotation tool, and you'll see what says a clear drawings. You see it?
I got Zoom. No.
On the
where do I go?
There's go back to your annotation tool. Oh, there it is. Okay, excellent.
I'm here.
Yep.
No,
so,
I did it for him.
Okay, excellent.
Right, thank you.
Can you press the X button on that annotation toolbar? The X, so I can have control again. Okay.
Annotation toolbar.
Yeah. Go click annotate one more time, and then there's an X on the right side next to the word save. Just exit. It's a little X. You see it? Go to I'll tell you what. Go back to
okay.
view. Go back to.
I'm sorry. I got it.
You got it?
I got it.
Okay, excellent. All right. So let me annotate. Okay, so now we know what an order block is. You got that, Himara?
Yeah.
We also know that why a BMS was created. All right. Which is the break and market structure, because this major swing structure, right? This is major swing structure. In between is minor swing structure. This major swing structure was broken, creating a BMS. So one of the questions you had is why was your, why not put the BMS, if I remember, like right here? Why is it here? The reason why it's here
Yes.
is because you need to go to the bottom of the wick of that major swing structure. That's what's important. This last candle.
Okay.
Justin, can you get close, zoom in closer to this last candle?
Yes, sir.
Yep, right there. Right there. Excellent. That's good. Yep.
Okay.
Okay. So think about what's going on. All right. 20 million here for a sell. Right. When you get here, drop 50 million.
Yeah.
He didn't drop that 50 million right here. He didn't drop the 50 million here. You didn't even drop the 50 million here. You dropped it at the tip, the bottom tip of that wick. So as much as a coach might say, wicks are not important, that is incorrect. The wick is very, very important because we are reading the why price changed. Why did price change? Because there was a reversal, and that reversal cost $45 million to move the market 1%.
Yeah.
That wick was very, very important. All right, make sense?
Yeah.
Philip, you got that?
Perfect.
Okay. So
wait,
that's.
Go ahead. Let me just. So he put the order down there, where the wick ends, right? Correct? Where the wick, in the very, very, very bottom of the candle at the end of the wick. He put that's where the buy order.
That's right.
In.
That's where that.
Okay. Oh, because this is a huge order. So this
correct.
is the beginning of this structure, right?
Boom!
Okay,
you got it. It is the bottom of the structure. Yes, that's the importance of the wick. Make sense? So important. Don't ever, because it's damn important. So important. It is the senior data to determine this. You won't know about BMS until you see this. Bottom of the wick. Because as soon as
that's the way I put the order. I get it now. Okay.
Got it. Yeah. Okay. Well, all I'm doing, guys, is clearing your misunderstandings. That's all I'm doing. The more you clear the misunderstanding, the brighter student you become, and you get control of this entire chart. Okay. So it is very, very important because that took a lot of effort to change direction. Here's what happened, Philip. Watch this. Someone put a $10 million order here. Someone put a $10 million here. Nope. Wow. 50 million did the magic. 50 million did that magic number. Bam.
And so they tried, but they failed.
Correct.
To turn the market around. Oh man, this is wow. This is
a
wow.
Yeah.
Oh gee.
What we're doing,
wow.
This is why indicators, so always go back to the basics, all right, guys? Back to the fundamentals. If you sense a feeling of confusion, you need to slow down that cyclone by grabbing one piece of data and you start marking, and you relieve yourself of the confusion. All right.
Julius, why are you not using trend lines?
Repeat that.
Why are you not using trend lines? Does it confuse the chart for you, or you don't use them? Or?
Okay, I do. Now here's I use the 200, I'm sorry, the 20, the 50, and the 200 EMA. And
no, I'm sorry, not EMAs, but the trend lines that you draw. Like I take I draw trend lines in order to.
Oh, you mean like this, like this, like that.
Yeah, exactly.
Oh, okay, like this.
Yeah.
Because I'm, you know why, I'm reading market structure, price action. The senior datum is liquidity. If it makes you see the chart better to do this, go for it. but it just adds to my personal confusion. I used to, but then I realized, you know what, I'm just going to, as long as I know where the liquidity is, because it's, and what is liquidity? Liquidity are areas of order blocks, stop hunts, and price imbalances. That's what it is. That's why I know that the market maker is going to seek to make an efficient market, right? And they are going to go back to those areas of liquidity to make the market efficient. What do I mean by making the market efficient? I've said this before, but I don't know if you've, I'll explain it because Humaira has probably never heard this. You see, in the real estate world, the market is very efficient. It's well organized. There are real estate agents that you can go to buy a house. You can jump online and look at an app. You can research the online to see market data. That market data is actually technical indicators to tell you what the market is doing, right? So, and if you notice the, anyway, so that if the market is always seeking efficiency, if you go to Colombia or let's say the Philippines, you cannot find a realtor. You can't find apps. It is a very inefficient market. So in an efficient market, buying a house and selling a house, Priscilla knows this, takes days on market. Let's say it takes a month right now to 2 months, 3 months, 90 days on market to sell a house. So if you list your house in 90 days, you know this because it's organized. There are indicators that can tell you this, and it's a very efficient market. So you could pretty much say, you know what, in 90 days, I'll have my house sold. But if you go to Colombia, you can't make that determination. You know, because what's happening is the guy that's selling it has owned that property and was passed down to him from his mother, and the family's owned it for 30 years, 50 years. And now he's going to sell it, and it's going to take him 2 years until someone literally walks by and goes, I see that sign on the wall. Let me give him a call. That's an inefficient market. So in the idea of what creates an efficient market, for every buyer, you're looking for sellers, right? And in order to create a efficient market in trading, for every buyer, we are looking for sellers. So in situations like this, let me show you. And this actually goes into our next topic of talk, which is what Philip had in mind, price imbalance. Okay. So if you notice, see this wick right here? This candle, this body of this candle here was all buys, all of this, right?
Yeah.
Since these were all buys, on a day, it closed as one giant green candle. And right here, we could recognize this wick right here. This wick right here, let me blow it up. This wick right here tells us we had buys, and it dropped, which basically means we had sells. Came here, we had buys because of the wick, buys, and we had sells because it dropped. And it had buys on the top because you got a wick on the top. Then you entered into this candle. Buy, buys, buy orders. Closed here, and the wick dropped here. So that basically means from here, from that wick to this wick, all buys, no sells, an inefficient market. This is called an imbalance. That's what that's called, price imbalance. You got that? Who got that wow moment? Philip?
Me, yeah.
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 This is the price imbalance. Okay, so you're going to find the price balance somewhere in the future, correct?
Yeah, that's a price imbalance. So when this price imbalance hit, right, the market will seek efficiency. So it will go back down to this area in order to make the market efficient, in order to pair up buyers with sellers. And this is an area of heavy liquidity. There's a lot of money that was flowing in here for all buys. So if these buy orders are here, they are still up here. Market maker knows when he gets to here, these buyers are now panicking because they're negative and lost it. Does that make sense? You got that, Philip? Yeah, you
And
got that.
somewhere in the future, we know that this imbalance is going to be corrected.
Correct. So when I had explained to FS Group that this was a wall of resistance, there's a reason behind it. I know today during the class, they had said it was an order block. It's not an order block that created the wall of resistance. I need to correct that because you guys will end up with misunderstandings when in reality, this is a price imbalance. This price imbalance were all buys, price pushed up. You know, let's say you put in an order here for $1,000. Your order is now what? A lot. It's 50.
You are recording this.
Yeah.
You are recording this, right? Okay.
Yeah. So your order is now 30,000, right? On $1,000 order. Boom, for a buy. Imagine if you did $10 million. You are now 30 million, 50 million, 60 million in profit.
Mm-hmm.
Market maker takes it down, made the market efficient, came down, hit the imbalance, dropped it. This buy is now negative, but the market maker made an efficient market. And that's what's important to recognize. This price imbalance is an imbalance in the market.
So these are the long wicks that create the movements, or not wicks, but long order blocks that have not been corrected. Is that right? That's the price imbalance.
No, it's not a long order block. It is not an order block. There's no there's no purpose as to why this is an order block right here. That's the order block, right? That's an OB.
But it's also imbalanced.
No, it's not, because take a look. What is the definition of imbalance? This entire square is order block.
Mm-hmm.
This little one is the senior datum order block. It is the most important, most significant order block. Okay?
Okay.
This is not a price imbalance. A price imbalance is when you have all buys, but you have no sells. I'm going to show you something else. Ready? We're going to look at more, and you'll really get this. Okay. Right here. Here's another one. Let me right here.
Mm-hmm.
Oh, in fact, you know what? Let's do this. Oh yeah, I you know, I want to stick to the daily chart for now. I don't want to be dropping time zones. Okay. Look, right there. You see that? Right there? Price imbalance, all sells in between. Make sense?
Yes.
All right. You need 3 candles,
Okay,
and then you could look into it. All right.
So, sorry for interrupting.
Mm-hmm.
When you have a price imbalance, so let's look at that green candle that we did at the beginning.
Right here. Yep.
You know what's happened in the past? So where the HH is on the side, it's kind of come into it a little bit. Does that not matter when you're looking at a new?
Let's take a look. Take a look at what happened. What does this recognize? It's a straight line, right? So what does it look like? On the upside, it is a BMS going up.
Yeah.
Here's another BMS. This here, BMS this. Here's another BMS. this here, BMS this. Does
Yes.
that make, okay?
Yes, yes, I understand that.
So does it matter? It's significant because it basically told us that we broke market structure, right? That's what it told us. All right.
What is the resistance? Why is it a strong resistance? The price imbalance point.
Why did I
resistance?
why did I call that strong resistance? Because I've looked at enough charts to know how significant that was when I seen it. You know, especially when now let me explain something. Part of the reason why it's important to for you guys to know this is because when I was going here, let me just start marking this up for you guys. Higher low. This is lower low. Whoop. This is lower high. Lower low. Lower high. Okay. And then let me drop this here. Okay. Trend line.
Technical question. How are you moving? What is your keyboard? How are you moving these these text?
The text. How am I doing it? I'm using a control. I'm using the control button. Yeah. I'm using the control button. Yep.
And it copies. Okay.
Yeah, and it basically copies it. Yep.
Okay.
Yep.
Okay.
Okay. All right. So your question was hold on, what is this doing here? Remove. Okay. And remove. Okay. So we know that we have a price imbalance right here. How did I know that this was significant? Oh, first of all, what I wanted to do was, part of the reason why I said I had a feeling that I should teach you guys was there were actually a couple students that kept asking questions. I was like, my gosh, these people need the right answer because, they're not getting the right data. That was the first thing. And then I just felt compelled to just help out. But big reason why is because I know that if more people other than me is looking at the market correctly, not some, sky and pie in the sky indicator that has a moon star and blood diamonds, that we're looking at this properly. I'm talking about properly because we're looking at order flow, institutional order flow. That's why this all works, right? Real time, where, where it's the pilot that's looking at the altimeter that's not looking at 14 periods back. If there are more eyes than this, than just me, I would not have been caught on this because I was in the group. I joined back in late January, and I didn't really start getting heavy into the group until actually all of this down here. But I missed this, just like everybody else. I missed this. This here is a change in market structure. This is a change in trend. Higher high, lower low, BMS, SMS. And I completely ignored it. I seen it, but I ignored it, And when I ignored it, because I kept thinking in the back of my mind we were going to go to 200,000 to the moon, I ignored this when this told me the whole story. On a daily chart, this is a big deal. We've got a large chart giving us a BMS, and if there were more eyes looking at this, someone else would have mentioned it, and I would have not second-guessed myself having a sense of euphoria and being high on my own supply. Does that make sense? That was another compelling reason why I said, you know what, I need to teach these people how to do it properly. So they're now, as far as day trading, that's a whole nother journey beyond what I'm showing you now, What is important is I am showing you how to read market structure, how to read the charts so that when you approach these charts, you can walk to it with confidence, start marking it up, higher high, higher low, market structure, high, lower low, BMS, market structure, SMS, lower high, lower low, so that we would catch this collectively.
Hey, Julius, can I ask you a question?
Yeah.
Okay, so say right now the market, the market maker pushes price up above the current lower high resistance around, like, say, like 44,000. Say it goes up to 44,000.
Yep.
And it holds support at 36,000, creating a new higher low and making a SMS and verifying it with a BMS on a daily.
Yes,
Would
yes.
you look at that as a bullish scenario? And would you switch your trend to, would you start, redoing your fibs and looking for bullish pullbacks? You know what I mean?
Yeah, let me show you something, right? See this right here? That is SMS, right? That is SMS. So is it possible that we won't break?
And I'm sorry, even though that green wick is lower than the red wick, that's still an SMS?
Yeah, the reason why is because when you're calculating an SMS, when you have a wick that digs deep on the second one, in this case, you grab the wick here and you grab the body of the final leg of the SMS. That's how it works, always.
Wait. I'm not clear on that. I would not mark it that way.
Yeah, I know that you probably do this.
That's what I would have done too.
Yeah, I know. This is when I back tested this and the way I was taught. The rule is when you have equal lows, even equal highs, you have this here, the first leg or the left side is your bottom of the wick. The second one is the body. The reason is because equal lows was a grab for liquidity. That's why. It was a grab for liquidity. Now, I'll tell you on the daily chart, I've said this in the chat too, which sounds counter, but you have to understand what's going on here. There are buys and sells here going on. It's a lot of liquidity. And when you're marking for a switch in market structure, this is the proper way to do it. However, when I'm reading what this is, it's really a price imbalance. We are grabbing for liquidity, but it is a price imbalance. So now that I've told you this is a price imbalance, what happens during price imbalance?
The market
will return to it'll get filled eventually.
Yeah, because it seeks efficiency. The market seeks efficiency. Look at this long ass wick.
That's your price imbalance.
Price imbalance. Someone said, "Oh, that's a stop hunt." It is recognized visually as a stop hunt, right? But it's on a high time frame. It is price imbalance more than it is a stop hunt.
Because there are many orders that go into it.
Correct.
Not just one or two.
Correct. Now on a 1 hour, so if you're looking at this from a 4 hour, right?
Okay.
Which is this. See it? Hammer, pin hammer. So, it's a pin hammer, bullish, we're going up.
That's really a price imbalance, unless it's on the 1 hour, correct?
1 hour or lower.
Okay.
Because look what it looks like on a 1 hour.
Yeah.
Right? So not only does it look like that in a 1 hour, well, look what happened when we draw this out. Right? Draw a line. Look at that. Look at the PI. And remember, market makers are so greedy that they will actually go back for one tick. One tick. So here's your PI. Look at it. It doesn't look, take a look on the 4 hour. What does it look like? Looks like, right? Take a look on the daily. What does it look like? Right? But you drop it.
So let me recap this so I understand it.
Yep.
Can you go back to the daily?
Yep, daily.
I have a huge lag. I'm sorry.
No problem.
Okay. Now there was an order on the bottom, and there is a price imbalance. So we're assuming that this has to correct.
Correct. And it has. It filled it right here. It filled this one with this action. With this action, it came back and filled it. Make sense?
Sorry, but this new this green candle is the long wick that you were exactly this one.
Yep.
So this price imbalance will also have to be corrected.
Okay.
But we don't know when it's going to be corrected.
Correct.
Okay. Now let me ask: are you saying that there is a market structure break right here? Are you betting on that? No, we don't know yet because it's not confirmed.
This is the major BMS that we have to break, right? This is the major BMS line. This right here. Which let me I'll drop it to the lower time frame and you'll be able to see it. Okay. See this right here? You see this, right? Grab the bottom of the wick, bring it all the way across. That's your BMS line. Price has to BMS this in order for us to have confirmation on a daily that we are on our continued trend to the downside, right? It has to, boom. Oh gosh. Forget that. Let me erase that. Okay, here, it's like this. Price has to actually go like this, like this. Once we break it, all right, we are BMS. But you said it yourself, this long wick on a daily time frame, what is it? You tell me. What is it?
Price imbalance.
That's right. So market's going to go back to make efficient, and it's a close one. It's there. It's right in front of us. You know, it's not like this. I actually was in disbelief to see that this market would come back, but that's what it did. But let me go back to the statement of why this was a wall of resistance.
Yes. Okay.
Because look at the entire chart. Are there any other imbalances this big?
No.
No.
No. Okay, so that being this imbalance on all buys, typically when you're looking for a resistance line, that's what you're doing, right? But in this case, can't do that. It literally is the entire price imbalance. And take a look. What proves the idea that this is even a deeper wall is because price came down from here, broke structure and filled the imbalance, came up and filled it on the upside, which basically filled this cell. You see it? He filled the cell. Does that make sense? Because this cell was all cells. At the time this was painted, this was all cells, no buys. The day later, price came back up and filled it. Make sense? So when price came up to fill it, he came into it, but did not break it. If there was a chance to give us a upward move for a continued 200,000, it would have been right here. But we never broke resistance. The wall of resistance, big ass resistance, we never broke it. So since we never broke it, price the next day dropped below it and never came back up and just tested it. That's why I call this a wall of resistance.
That makes sense.
All right.
Now,